The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, coming out of a 3-day holiday weekend, a very tough day in the grains and oilseeds with heavy pressure in the soy complex and in wheat that spilled over into corn as well. And then on the flip side, a really strong day throughout hogs and cattle on the day Tuesday. Let's try to make sense of it all. We welcome in our good friend Brian Splitt with agmarket.net joining us here on the show today. Brian, hope you had a good Memorial Day weekend, sir. And, I made this comment before we went live. I said I kind of tried to distance myself from the markets while I was gone last week, and it felt like the market stabilized a little bit, but then come in here Tuesday and a huge down day. Maybe I'm a bad luck for this market, Brian. Maybe I need to go back on vacation. What a tough day on Tuesday.
Yeah, I mean, I guess if we could collectively pay you to go to Jamaica again, if that meant the grain markets would go up, I think people would be happy to do that, and so would you. I did my part today. I wore a green shirt, so maybe people should be looking at you, Jesse. Well, you wore red today. What's your problem?
Yeah, I don't know. Reddish pink. I don't know. Maybe I'm starting to lean towards I am a bad luck charm here with this market, Brian. Man, oh man. I guess my first question to you in the grains, there's a lot of lack of fresh news. It feels like we're watching weather. We're watching all the economic concerns with the debt ceiling. I know you mentioned to me some Chinese economic concerns. I wonder, though, too, was some of this maybe tied to end of the month possibly here? We got, 2 days left in May. Do you think some of that was maybe just a little bit of squaring up of positions, too, and then we accelerated it to the downside in grains? What's your thoughts?
Yeah, entirely possible. You always have to be aware of beginning of month and end of month market movement and money flow. I do really think, so many people were, and including myself, were really anxiously awaiting the weather forecast coming out of this holiday weekend. And I just didn't see a forecast that warranted this much selling today. And I understand there's some chances of rain at the back end of these models, but we had some internal conversations with some of the weather guys that we work with, and there was a thought that maybe the maps were overdoing some of the chances of precip just because of how dry it is right now and a lack of humidity to bring about these rains. So I really do think the outside markets were a major headwind today. Crude oil down over $3. You just have concerns about Chinese economic data, and they're talking about COVID again over there. And if that's a part of the conversation piece, then I think the market starts to wonder if we're going to see lockdowns again. And if there's a country that's going to go under lockdown because of COVID, it'll be China. So I think that definitely had a big part in the selling today. Plus, you look at the two major performers to the downside today, beans and wheat. And both products we have coming into the U.S., we're importing both. There's reports of about 290,000 tons of beans coming in for Purdue, which will come into the East Coast. We're bringing wheat in from Poland. So, obviously the European countries around Ukraine don't like the fact that some of that product is getting dumped into their country because it's depressing their local values. So, of course, the U.S. wants it. Let's depress our own values. But that says a lot that it's actually cheaper for them to import from Poland or from Brazil rather than rail it east. And that just shows you the disparity in the market between our competitors in the U.S.
Great thoughts there, and something that I think folks maybe didn't necessarily pay too much attention to is some of that, wheat coming in from Poland and beans from Brazil, etc. Corn market, if I got to find a bright spot in the grains, corn held up okay on Tuesday. I thought for a while there that July corn was going to try to hold the $6 mark. It didn't, but it settled just below it. Uh, Corn's kind of provided stability, it felt like, here the last week or so. As you look at the corn charts and you examine this corn market right now as we near the end of the month, Brian, what's your take in corn? Can we try to hold this together a little bit in that side of the trade?
Yeah, I mean, July corn definitely gave it the old college try this morning at $6. That was kind of the area I wanted to see it stay above. We had made a new high for the month on Friday on July corn, having gotten above six. So, with selling coming in early, I was hoping they would support $6 and close it over six. It took them, a good chunk of the day to push it through six, but once they did, the spreads unwound. July SEP corn was up like almost a dime this morning and then was lower on the day late in the day. So I think you have people wondering if maybe we're going to see another round of cancellations, because that's what the spreads did last time we had a cancellation of old crops. So that's something to be mindful of. But higher highs and higher lows, we didn't trade below Friday's lows even as much as we were down. So it was the bean market that made new lows for the move. And that's for both the old crop and the new crop, and settled into new lows. And then, of course, the wheat market, down 40 today, and hard red was an aggressive move. But corn, I guess, between all three products, definitely held in the best. And we got to get back over 540 Ds. If we can do that, then I think you'll see some more technical buying. But as of right now, we made highs early in the month, and then we made highs coming out of the weekend at that, mid to upper 530s. So until we can get through that resistance level, it's going to be a tough area to push through.
Well, in the case of wheat too, and this, you mentioned hard red, to me, it doesn't quite make sense, the big sell off. I know we've had plenty of rain in the plains here in Oklahoma and Kansas the last week or so, but there is so much damage to that crop. To me, this big move down on Tuesday in the wheat trade that helped kind of tug on corn as well, it really felt psychological to me. To me, it doesn't make sense. Maybe I missed something there, Brian.
Yeah, the $8 level in hard red wheat seems to be a bit of a pivot point. When we're below it and we get back above it, we start to see the buying kick back in. When we're above it and then we trade below it, then we start to see the selling, and that's what happened today. We spent all last week above $8. We had gone down to about 735 on that last major low, and rallied about $1.50 off of that, just to come a buck off that high in a very short period of time. So this market is extremely volatile right now in wheat. And so again, if we're going to see things try to recover from here, and there should be some good support around 780. That was a major pivot low that we had previously. So we went down and kind of checked that area, saw some minor short covering off of there. If we can hold 780 for another couple days, reassert ourselves back over 8, I wouldn't be surprised to see things push higher again. But yeah, really disappointing to see, missiles hitting Odessa and more talk about the Black Sea, and just see that type of selling come in. So I agree. And sometimes it's hard to really know what value should be when you're talking these huge trading ranges. You see $1.50 move in wheat, because we get rain, where does that put us? How long is it going to take where more rain is going to bring in some additional quality concerns on the wheat that is going to make it, right? So I think that's part of the conversation in China too. They've continued to get rain, and that's going to dampen their harvest. So you wonder if maybe China may not come back in here at some point and look to own wheat if it continues to rain there. But these are all, ifs that haven't come to fruition yet, but things to be mindful of.
One other note in soybeans, I wanted to pick your brain on it, and I believe I looked at this right, but I think based on July futures, board crush the lowest since June of last year. I wonder if that's something to keep note of. And then also this whole Prop 12 situation in California, I wonder if that could have a major impact on soybean meal demand. Just looking at those soy products and more, I wonder on a couple of those items like that, or some of those things weighing into the soy complex as well, Brian?
Absolutely. Soy oil was nearly limit down today. And, that market had a head and shoulder top, and it met its objective last week. It got a decent bounce, but right back down to that 46 level for July. That was the objective on the head and shoulder pattern. July meal also has a head and shoulder top on it. That projects to about 375, so maybe about $20 to go to the downside on meal to hit that objective. And you're right. I mean, the concerns about hogs and feed demand for hogs is going to be part of that conversation. But you look at what hogs did today. You had nearly record short levels for managed money on the commitment of trade report, and we come out of the weekend strong cutout values, and we were limit up today in several contracts. So we're going to see some expanded limits. I think it's like a $9 plus limit in hogs tomorrow. Be prepared for a really big trading range tomorrow. I wouldn't be surprised if we gap higher, trade a few bucks higher, and then see it reverse and trade lower. That just seems to be what these guys want to do with that product right now. But it's been a really tough market to watch on the hog front here, and Prop 12 has just exacerbated that.
It has been a tough market to watch, and I wonder, as you alluded to, is this just another short covering rally, and we'll trade a wide range tomorrow and then give it all back? This hog market's just been perplexing. It's been tough to talk about, hasn't it, Brian?
It has. I mean, every time you think you've got a little bit of a reversal signal and maybe, oh, hey, that's the low, it might go up another couple bucks in the next couple days, but they sell those rallies, and before you knew it, you're making new lows. And every time you make a new low, they really just squash it. So we did make some good headway in some of these deferred contracts. So, it was nice to see June, July, August limit up, but October, December hogs took out some highs that were made last week and closed above them. So hopefully that brings in some more technical buying and some additional short covering. And I think maybe that's the best thing in the short term that we have for us is the idea of short covering until we get some fundamental news to say, we need to go higher. And I don't know if we have that news yet.
We're talking with Brian Splitt of agmarket.net here today on Market Talk. I got two other things I want to ask you about, Brian. I should touch on cattle. Really strong day there Tuesday as well. I know feeders especially. I think we had some good spillover support maybe from hogs, but also from grains being lower. Any other notes for you? Anything you're watching chart-wise in either fat cattle or feeders right now?
I mean, you had some new contract highs in a lot of the fat and feeder cattle contracts, and the uptrend is still very well intact. I think the market is happy with the idea that this debt ceiling issue might be getting resolved, and if kicking the can down the road is resolving it, I think you could have a whole other conversation about that. And I don't like what they're doing there. I think the amount of spending they're planning on cutting equates to just a few days of government spending. So what is the big deal anyway? And we're just not going to have a debt ceiling again until 2025. Okay, great. You look at the live cattle right now. I mean, there was some talk over the weekend of maybe some significant loss on some live cattle based on some flooding that we've seen. So that might have been part of the issue today on why the fat market saw such strong buying. And again, some spillover from cattle or from the hogs, but I don't even think the cattle need spillover buying from hogs. They've been able to do their own thing as hogs have broken substantially. So I have a hard time tying the two markets together right now.
You mentioned the debt ceiling, and that was the other thing I was going to ask you about. I'll let you expand on that just a little bit more. I know we have this deal, quote unquote, in place, still got to get it technically across the finish line here, but just the overall uneasiness, I feel like, is still out there, commodity wide, economic wide, across the stock market, et cetera, until we know exactly what they're going to do, what's in stone, et cetera. Just feels like that's an overhanging black cloud right now in this market trade, Brian.
It is. And if I expand on it much more, it's just going to be me telling you how much I dislike American politicians. So I don't know how much more there really is to talk about it. But you're right. Until they get something signed and inked up, it's still going to be an issue that's going to affect the market here until we know exactly what's going on. But, had quite a strong opening in equity trade last night, especially the NASDAQ, some continued buying there because of NVIDIA. That's one of a few $1 trillion market cap companies right now that are generally mostly in the tech sector. So the run that we've seen on that particular stock has been extremely impressive. It's very overbought. So I wouldn't be surprised if maybe once this deal gets inked, if it does, you see a little buy the rumor, sell the fact in the equity trade. The Dow just is not having it. That market is not performing like the NASDAQ is. So, all the money seems to be plowing into tech right now. And I don't know if that really is an indicator of a good overall belief in the stock market. I think they're putting money in very specific sectors, but we're not seeing the broad-based buying in the Dow that you'd like to see with a healthy economy.
Well, final thought, any risk management thoughts? I'll let you pick if you have one or two things just to mention for growers here. Obviously, you don't want to trade off a big down day like this, but just some things to keep in mind here as we're entering into the month of June. Anything on top of your mind right now, Brian?
Yeah, I think just continue to expect volatility. There should hopefully be some additional opportunity. I don't think this weather market ended just today after a little short covering coming into the holiday weekend. I think today was more about the big picture stuff going on. So we'll get some crop conditions this afternoon, see how that comes out, if those numbers are disappointing. And let's not forget, this dryness isn't just dryness in the forecast. It's been dry since early April. So we're looking at 2 months of below normal precip that we've already seen come to fruition. We're going to get another couple weeks of that. And if this moisture that looks like it's in the extended model starts to get backed off, I think we'll be right back up again, revisiting last week's highs on corn. So I think you just got to stay nimble and identify key levels. And right now, 540 is a key level in December corn. So if we revisit last week's highs, maybe it's a spot you should be thinking about selling against with a reasonable risk reward. But again, you got to stay nimble. And I think this is a good time to use some of these weekly or short dated options to aid you in your decision making.
Brian, you guys have a lot of great insight, expertise there at agmarket.net. What's the best way for folks to reach out to you?
Always check us out online, www.agmarket.net. You can sign up for a couple-week trial of our intel, see how we think. You can check out our app at agmarket.app. And if you want to reach me directly, it's 815-665-0463.
Well, I always enjoy the conversation, my friend. Brian Splitt with agmarket.net. Thanks for joining us here on Market Talk today. Have a great week. We'll talk to you again soon.
All right. Thanks, Jesse. Have a good one.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.